Hello, friends. So over the weekend, I was in Newark, California. We had a nice meetup. We talked about gold and silver in 2026. And after the meetup, we all went out and had a nice snack. And, we spent almost 3-4 hours together. So that was a really fun time. We discussed a lot about gold and silver. And ever since the meetup, I'm getting a lot of questions on WhatsApp. And obviously, you guys are discussing it openly in the WhatsApp group as well about what's happening with gold and silver. So obviously I cannot put all my thoughts together in this 15-20 minutes video that we discuss over 3-4 hours over the weekend, but I'm going to try to put some basics to kind of help you understand what's happening with gold right now. And then I'll strongly encourage you next time I'm in town, whether I'm in Dallas, Houston, Austin, or in California, please show up to the meetups. Let's get to know each other. Let's chat more about different subject matters out there. The world of finance is huge. Now, before I begin and talk to you about gold, let me remind you, I'm a tax advisor. I'm not an investment advisor. I'm not here to tell you whether you should buy gold or you should not buy gold, or at what price you should sell or anything like that. For that matter, I don't give any kind of investment advice whatsoever. I'm not a guru. I'm just a simple student of economics and finance, and I'm only here to share my thoughts. So don't take it otherwise. I don't sell you gold bars, or I don't have an ETF that I want you to invest in. I don't have any scheme that you want to invest in. Although, in all transparency, I do run a coaching program. So if you're interested in learning about that, reach out to me and we can have a conversation around that. So now that we get disclosure out of the way, let's talk about gold. Obviously, this is no secret. Price of gold continues to go up, right? The big question is that you want to know answer to is, why is gold keep rising? And number two, is it too late to get into this trade? I think those are the two questions that everybody's asking. So today, let's try to answer those questions. So number one, why do people get into gold to begin with? Now, the real reason people get into gold is because they want some sort of safety. Although right now I'm seeing some people getting into gold trade because they want to make a lot of money. Gold was up a lot, almost 60% last year. They feel that, hey, maybe the gold can do that kind of magic again, and that's why they want to get into gold trade. Now, if that's the thought process you have, then you might be making a mistake. Gold is not supposed to give you 50-60% returns per year. That is just simply not right. So if you're getting into gold because of that, let me stop you right there. Now, there are a lot of other reasons you want to get into gold, and I'm going to discuss those today. But if the idea here is, hey, just tell me a trade where I can make 50-60%, this might not necessarily be the right thing to do. Although, is it possible that gold might go up 40-50% this year? Yes, absolutely possible, right? But that's not the reason I would get into this trade with. Gold is often seen as an inflation hedge. So, and that's how financial pundits today see it. That's how our parents saw it. That's how our grandparents saw it. This has been going on for generations. Just ask around in your own family. You don't need me to tell you that. Just ask anybody senior in your family, they will tell you. Now, having that said, ask yourself this question. What are central banks around the world doing right now? Not just the United States, but around the world. Number two, what is the Federal Reserve doing? What does the President Trump wants? What kind of a Fed share are we going to have in 2026? I think if you start thinking about this question, or you start answering that question, most likely you're going to arrive a simple answer. We are going to print a lot of money here in the United States as well as around the world. Simple as that. So Federal Reserve alone is creating roughly $40 billion per month. So keep that in mind, $40 billion per month, and they are only getting started in the latest round of QE. Now, obviously, they're not calling it a QE. QT has stopped, but now they're printing $40 billion per month. What did that tell me? Very simple. More money out. So when there's more money out, what happens? Everything gets more expensive. There's nothing you can do about it because there's more dollars out there. Your car going to get expensive, your home going to get more expensive, your electricity going to get expensive, your water, your food. So would gold. If everything is going to get more expensive, why would gold not get more expensive? Take a look at, people tell me, Deepak, gold has gone up by 60%. Okay, well, maybe that is surprising to you because it's gold. But have you been to recently to a restaurant? I mean, because I do travel, so I go there. Sometimes I'll see a dish that used to be sold for $10, now getting sold for $15, $16. What about that? I mean, just a dish, a food item is up 50 to 60%. What are we expecting gold to do? So I want you to think about that for a second. All the you guys all shop, you go to grocery shopping, you go to different, maybe you travel, take a look at your airline ticket, hotel, take a look at your food. What's happening? If everything getting expensive, why would gold not get more expensive? Point number one. Number two, so interest rates, obviously that's a big story, right? So inflation numbers are telling you that inflation is roughly around 3%. At least that's what government want us to know. But again, how do they come up with that number? We don't even know if those numbers are accurate. In matter of fact, there is really no true way to measure inflation today. The only way to measure inflation is just take a look at your expenses. How much are you spending on gas, food, other bills? That will tell you. I think for most people, and we've been talking about this K-shaped economy for a couple of years now. For most people, inflation today may be roughly about 6%, 7%. Some might even argue 8 or 10%, depending upon what kind of shopping you do. Now, compare that to investments that you might be having. Like, for example, if you have dollars sitting in a money market fund or maybe a savings account, maybe you're making 3%, maybe you're making 4%. Maybe you have, treasury bonds or something like that. Maybe you're making 4%. If inflation is 8 or 10%, and then you're making 3 or 4% safe return, that means you're losing money in spite of that saving, right? So this is called negative real interest rate. And remember that 4% that you're earning from savings account or other places, you still got to pay tax on it. So let's say most of you are in 30 or 40% tax bracket, you might give away 40% or 50% of whatever you earn back in taxes. So you're actually losing money, even if your money is sitting in money market or in savings account or anything like that. So in real terms, you're actually losing money. You're losing purchasing power just by saving money in US dollars. Idea was that we can go around the world and tell people, hey, it's better for you to save your money in US dollars than saving it in your own currency. But now all of a sudden, the world is waking up to a new reality and realizing that not necessarily be the right thing to do. And this is exactly where the gold becomes very attractive. Not because it's going to make you rich, but because it helps you not get more poor. It helps you preserve your capital. That's the thought process that people are starting to realize. Now, gold is not the only way to save your to hedge against inflation. There are other things you can do. You can, for example, you can buy stocks. You can invest in S&P 500 or QQQ. You can buy real estate. You can buy other assets as well. I mean, let's just take a look at last year. S&P 500 was up 16%. So if you had $100,000, instead of putting in a savings account where you might have actually lost in real terms, but if you would have put it on S&P 500, you will have earned 16%, which is fine, because if you lost 8% in the inflation, you would have still made 8% on top of that. So that is okay. But again, remember, then you still have to pay taxes and all that stuff. So not that good. Then take a look at some of the issues around the world. Like, for example, Indian stock market didn't really do very well. China market did well, but they also have real estate problems over there. So that particular segment was crushing as well. But if I was living in India or China, wouldn't I really think about investing in gold right now? Because I don't have to deal with, we don't know what Trump policy is going to look like for India and China in 26 or 27. If I was living in Europe, maybe I would be thinking the same thing. I don't know what policy is going to look like. I'm not even talking about government. I'm just talking about an average citizen. They might be thinking, we don't know what kind of things that we will run into in 2026 and 2027. So maybe, just maybe, gold might be a better hedge. So if your goal is to preserve purchasing power, would you rather manage a rental property, deal with tenants, maintenance, take on mortgage, which might be, maybe you get a good rate, but most likely you won't. Most likely you're paying 6, 7%, and then deal with the regulations and politics, all that kind of stuff? Or would you just simply buy gold where you don't have to deal with any of that headache? So again, I'm not talking about people who want to make tons of money. That's a different story, because for that, you got to take risk. I'm just talking about people who prefer just to preserve their capital. So I think for a lot of people who like simplicity, you know, who don't want to deal with tenants, who don't want to deal with stock market. These people prefer gold. Now, this is where a lot of people get confused. So in 2025, I think gold went up 65%. Now you might say, well, wait a minute, but inflation was not 65%. So how are you relating gold with inflation? Well, gold is not rising just because of inflation. There are a lot of other reasons why gold is rising. For example, central banks and governments, they are aggressively buying gold. We discussed this in great detail. Take a look at, for example, China. Since 24, 25, 26, they have aggressively been buying gold. Same thing with India and many other countries, and they're not stopping. And as they feel more and more threatened by United States or by other geopolitical situations around the world, they might think about buying more, and this trade might continue to happen. So I mean, I'm sure you do the same thing, but we work very hard to earn our money. We trade time, we trade our energy and effort. Oftentimes we make a lot of sacrifices, family, health, freedom, and the governments, for example, President Trump or central bankers or some of these other people in power, they don't think about all that. They just come up with the policies. They just simply create more and more money because that's how they can solve problems. We can't. Like President Trump can go out there and say, look, I'm going to spend another $5 trillion on defense. Well, okay, but we don't have $5 trillion to spend on defense, sir. No worry, I'll just go ahead and print $5 trillion and we'll spend the money. Well, I can't do that. If I don't have money, I can't spend. So the point is the US government doesn't play this game only with Americans. Now they're playing it with the entire world. So other countries are giving their resources, they're giving their labor, and they are receiving dollars in return. But in 2022, something changed. The US and its allies froze hundreds of billions of dollars for Russian reserve just with a button. Now, again, I'm not getting into whether what Russia did was the right or wrong. That's a different story. But we're talking about money here. Basically, all the friends of the United States and United States decided we are just going to take somebody else's money. Okay, just like that. Why? Because we don't like what they're doing. It's kind of like saying, for example, if United States were to attack Greenland or Venezuela, the rest of the world say, you know what, we are going to take something that belongs to the United States. I don't think people will do that. I'm just saying hypothetically, you can imagine what kind of reaction the United States would have. Well, the rest of the world is having the same reaction. So since then, obviously, people start saying, hey, look, we don't want to be too much dependent on gold. We need to diversify, and they start piling into gold. Now, from the 90s through early 2000, central banks were the net sellers of gold. The world was growing, debt was okay, manageable, and gold was not necessary. So I'm bringing this up because people always bring, when we're having this discussion call, people bring up that period that, hey, why was gold dropping like a rock back then? That's the reason. After the global financial crisis, you guys all remember that 2008 fiasco, central banks became net buyers of gold every single year. And that's the statistic you want to pay attention to. Why? Because instead of allowing a depression, we don't want that to happen because we lose more money because of depression. We simply printed more money. QE became permanent, and people in power realized how profitable that system was. Every time, every president who says, hey, let's just push the button and let's just printing more money because it works. It looks good on paper for them. It looks good for their party, and nobody can blame them. So the wealth in terms of dollar continues to go up, but in terms of gold, it's not really going up. Historically speaking, and I shared some numbers. I even did some math from different perspective at the meetup, and I plan on doing these meetups on a regular basis now, so we can kind of revisit the thesis and see where we are. So please do come to these meetups. But a typical gold cycle can see a lot of a return. Like we're talking about 7x to 8x. Similarly for oil cycles, by the way, we were discussing in our Discord channel yesterday, the oil cycle sometimes can do that as well, anywhere between 3x to 5x returns in oil cycle. So if oil can produce 3x to 5x return, why can't we expect gold to do the same? It has done that in the past. So in 2000 bull market, gold rose almost 600%. So almost about X. Maybe we are on that trajectory. Maybe we see that. So all depends upon what kind of environment we are in. Now, the key thing to pay attention here this time around is the debt. Not just United States debt. I'm talking about the global debt, public debt and private debt. Private debt is going crazy. I mean, take a look at OpenAI and all the money being raised for these data centers and all the infrastructure and all that kind of stuff. So the debt cycle is really, really high. That matters because high debt limits how high interest rates can go. If you're taking a lot of debt, you cannot go raise interest rate to 20% or 30%. That's just going to kill that, right? Fed used to be able to do that to crush the inflation. And obviously, when they do that, gold will collapse. But can they really do that now? Because of, governments are taking, just forget the private party like you and me. The United States itself is paying trillions of dollars in interest rate. They are adding on almost $1 trillion to their overall debt every 100 days. They can't just go out there and increase the interest rate to 10% or 20%. That would be one way to bring the gold prices down. But can they really do that? Not in today's environment, just not possible. So let's make the thesis very simple. Will central bank keep printing more money? And I'm not talking United States, just around the world. I think the answer is yes. You can answer yourself. Will interest rates be cut further in 2026? Now, if you take a look at GDP, you take a look at unemployment, you take a look at the current state of economy, you'll probably say, no, shouldn't be cut. But we're talking about BlackRock CEO possibly becoming the next Fed chair. President Trump won interest rates at 1%. He said it very clearly that whoever the next Fed chair going to be, they have to listen to him. He wants interest rates at 1%. I would put a high probability we are going to get some interest rate cuts in 2026, although current numbers are showing we shouldn't. Will other countries start to trust United States again and dump gold to buy more treasuries? I don't think so. I think most likely they will probably maintain the same level of treasury that they're buying just to keep the United States happy and continue to pile on to gold. Another question, which is perhaps the most important one, at least in the Trump administration, will the geopolitical tensions around the world ease? And whether they are caused by the United States or somebody else, different story. But the fact of the matter is they won't ease. Things are getting more and more complicated, And lastly, very simple, will central banks around the world continue to buy gold? I think most of you guys already know the answer. Yes. So I know when the gold was 2,000, 3,000 seems like a hard number. When it was a 3,000, 5,000 seems like a hard number. Now it's 5,000. And if I say it's going to be 6,000, 7,000, 8,000, you might say, well, that's hard to believe, but so were all the prior numbers. My point is, I don't know where the gold is going to be in next year or two. Most likely it'll be a lot higher. But until the underlying issues that I have discussed today, they get resolved, I don't see how you crash the gold. Now, can gold have a small correction? Maybe it goes down 5%, 10% on some news? Sure, that can happen. But most likely, it won't. It maybe correct and then just come right back up. So I don't see any of that happening. As far as would I continue to buy gold? Absolutely. Just like I do with anything else, the process is very simple. DCA. Take a small, like if you have already a large position in gold, that's fine. Then you don't have to worry about it. If you have no position in gold, you start buying a little bit. And over time, and remember, if you're investing in an asset class, you don't invest for 1 month or 1 year or 2 years, you're investing for over 10, 15, 20 years. So if you think about it, how much money printing is going to happen from now till 20 years from now, that's going to blow your mind. So that's the way you want to think about, when you're thinking about your kids' plan, education plan, Trump plan, or their Roth IRA plan, or your IRA plans and all that. Matter of fact, I'll leave you with one last thought. So many people I talk to, I think on a regular basis, a lot of people think that everybody's in gold trade. That is not true. In matter of fact, especially the big guys, hedge fund managers and some of these big companies out there, they don't even have an asset allocation of 2% in gold. It's not owned by a lot of these people because it's not a money producing, right? It doesn't really generate income. So it's really purely supposed to be in hedge. I think people didn't really need that hedge before because they were confident in the United States, but I think that confidence is a little bit shaky right now. And because of that shakiness, more and more people are going to continue to, maybe bring that asset allocation to 3% or 5%. And if they do that, gold can significantly go higher from here as well. So I think those are the kind of things you have to keep in mind. Silver acts a little bit differently, but again, we're already 20 minutes, so I don't want to spend another 20 minutes talking about silver. Maybe that's a topic for another day. But hopefully this gives you enough points that you can think about that. But we discuss a lot more specifics and a lot more details at the meetup, which I will try to do again whenever we do the next meetup. So just follow me on online and join our free WhatsApp group if you want to be part of the community. And I'll see you maybe in Austin, Dallas, Houston, or in California. So I'll see you next time. In the meanwhile, if you need some help with your taxes, then reach out to me via taxcodeadvisors.com. See you.